Hello everyone and welcome to Hit the Mark Trading's Daily TF Russell 2000 Futures Review. My name is Martin Rimes. Today's date, Tuesday, March 11, 2014. Hey, I'd like to announce that I'm going to present a webinar sponsored by the ICE Exchange and Trader Kingdom. Now, if you're interested in this, the event will be held Thursday, March 13th. Wow, that's 2 days. And we're going to do this after the market closes at 4:30 p.m. Eastern Standard. Okay? If you are interested in attending this, and let me tell you, they are always well attended because I don't go into any type of a sales spiel. I'm strictly a trader talking to traders. So if you're interested in this, please check out traderkingdom.com or please check out my Rooster Call. And if you haven't signed up for Rooster Call, gosh, I don't know what you're waiting for. Rooster Call is my early morning review of the news as it pertains to what we need to be concerned about. The news as well as the charts. Very brief. So I send this to clients, and I decided to expand this out and send this to anyone who's interested. Okay. So this morning, for example, I tend to look for markets that day traders are going to be interested in. And this morning, we looked at the Australian dollar. I said monitor where it's ready to tumble. Soybeans, corn, and a couple of other items. So, if you find it advantageous to have an experienced trader help you set up for the morning, by all means, it's not an exhaustive report or anything like that. There's no charts, no nothing. It's strictly a fast read to get you started for the day. Okay. Now, remember that everything I mention in this video recording is for your educational purposes only. I would like you to use this video as part of your own due diligence as you look at the markets yourself. Great. All right, we're here to talk about the Russell 2000, a little history provided by the weekly. And what you have here is an ascending wedge. Hey, this is a classic price pattern. Now, I don't really teach price patterns, but when they are in your face and we know they're close to breaking out, I would be remiss if I didn't mention them. So what happens on the ascending wedge, we can go either way, but there will be a breakout. And the tendency is for these things to break down. We saw that earlier in February with this price falling down to our moving average, 34 exponential moving average. And all of a sudden, boom, pop goes the weasel. Well, you know what? We launched a rash of trades. And it's just wonderful. It's just wonderful. And the thing about this is, when you see such a great price pattern, you can already ascertain, well, hey, how high is high? Okay? Because more often than not, this line holds. It certainly has. Now, let's go to the daily chart. All right, my goodness. Here we've got this line drawn here, line down here. Nice, clearly defined area where we're going. And we've got where we touched the top of the line and then just started falling back. Okay. Now, we see this price bar on a lot of markets. Okay, kind of a reversal type on Friday, last Friday. Let me make it bigger for you. Actually, on the ES, we did have a higher day here, but all we did on last Friday was to confirm what we were seeing as reversal price bars in other instruments, such as the ES, okay? And I think maybe the Euro, I can't remember. Just talked about it this morning. So what do? We fall back down. Okay, well, my goodness, here's a resting stop. I see that. If the move continues down, we expect to move to the exponential moving average, okay, which is right here at another resting spot, okay? All right, so if I look at this chart, I'm saying, my goodness, I've got my trend. I measure the trend. I've got my trend in a super freight train mode. So normally I would think, any down move is probably going to be short-lived, okay? So the real test is what happens at 34 exponential moving average. That's the test, and then by all means we can certainly fall to the bottom. We expect this channel to hold, okay? Now obviously at some point these channels do break. We know that. But so far this has been an incredible run respecting this channel line, okay? All right. Now let's go into the intraday chart. Today, oh, by the way, I use a 10 range bar chart, a 10 range bar chart. So early morning, okay, we were up a little bit, and then very typical, we were up a little bit here in the pre-market, and boom, 9:30 opens, and what do? Sell it off a little bit, okay? Well, the move continued down, and then we come to a floor pivot and come back up, okay? And this was perhaps on that economic report at 10 o'clock. Up we go. And all of a sudden we get some signals down here. Hey, we're ready to go short. And boom, what a day, my goodness, what a day. What a day, okay? So we obviously don't have the time in this presentation to go through everything I do. But you can certainly see just following the simple diagonal trend line break. Okay? Very simple system. Very simple. Okay, so let me leave you with one thought. What are we doing for tomorrow? Okay? All right. Well, first off, let's draw some lines. We're going to draw a line like this. Here we go. And we're going to draw a line like this. So I believe this is the channel. I really would like a line like this. Okay. But I do have rules when I draw the lines, and so I'm going to draw it up here. Now, the funny thing is, money comes into the market at the end of the day. Anytime we go down, money somehow miraculously emerges to keep this market moving higher off the low of the day. Okay? Because they want people to think that we're going to go higher. And they're so concerned Asian market will open up, and that the Asian market will say, we finished on a low, we couldn't move higher, and then they cascade everything down. So if you're looking at this as a trading instrument for tomorrow, draw your lines, draw your line, okay? And what you should do, in my opinion, let's see, 1184, 1186, I would let price resolve the issue. Don't get engaged in that game, please, of, guess and jump in and cross your fingers and hope it works. What you're being told here is price is non-directional. Therefore, breaking this line is meaningful. Breaking this big trend line is meaningful. If we break up, okay, if we break up and go through this line, automatically we're going to go to the main pivot. Okay, that's pretty much a standard given. We could actually go higher. Okay, there would have to be some most likely positive news, but we could actually go higher. If we come up to 1200, Is that really too far off from where we were? No, not at all. Okay, so this is totally possible. In the event that we fall, in the event that price decides to drop to the bottom, then we should expect price will make a run where? To the next floor pivot, which happens to be this bottom channel line. And the fact that those two are together tells me there's a very powerful magnetic attraction. Okay, I want to go there. That's what price says. I can't help myself. Obviously, if the market becomes a little concerned about making a new low, we could go lower. I mean, this whole market is really subject now to the heating up going on in Ukraine. Okay, that is one pull, and then the softening of China's economy. Okay, wow, we talked a lot, covered a lot of ground tonight. Let me leave you with this thought again. If you're interested, I'll spend an entire hour talking about riding the price wave with momentum trading. This is Thursday, March 13th. Remember, I'm going to do this at 4:30 p.m. Eastern Standard Time. I'm going to blow you away with the simplicity, and I think you're going to love it. It speaks to so many people. Go to traderkingdom.com, and also I will have this in Rooster Call. Please sign up for Rooster Call. Talk to you later. Bye-bye now.